Welcome to the Power Market Report. I'm Albert Liu, and joining me now from Dallas, Texas is Don Luskin, Chief Investment Officer of Trend Macrolytics. Don, greetings from the most locked down state in America. I made this sign for you, California 188. You can explain what this means later, and we're number one and apparently proud of it.
Great.
How are you, Don?
I'm doing great. And nowadays, how are you is not a trivial question. Glad to see you're healthy, Albert.
Healthy, happy, yeah, I'm doing very well. You produced a series of videos recently, which I really enjoyed, and I thought sort of illuminated what's really going on when it comes to COVID, the actual numbers. You were upfront with this long ago. I forget when we did our first interview related to COVID, and this is before we had hard, concrete numbers.
Right.
But you made one comment that I haven't forgotten, and that comment was, recessions hurt people too. Recessions cost lives too. And this was one of the things you investigated through these videos, but you talked about a lot of other things. So let's start with the premise that common knowledge, it may be common, but when it comes to COVID, I don't necessarily think it's knowledge. A lot of it is sort of ill-conceived rumors and pseudoscience, whatever you want to call it, but unreliable nevertheless. So take it away.
All right. Well, so much of what you have been hearing about COVID 2019, and especially when it was new, and we didn't have any actual experience with treating it or counting it or measuring it or testing for it, all we had to go on were models by epidemiologists. And the people who make these models, they have the same kind of training as the people who make models on Wall Street. And if you remember the crash of 2008 and 2009 that was caused by the inadequacy of those models, boy, you'd think we'd learned that lesson, but we hired these same guys to model the course of viruses. And based on those models, we deliberately caused a global depression in order to suppress the enormous number of deaths that these models forecasted. The thing now that in the fullness of time we know is so completely absurd about that is we can look at the number of deaths that have actually occurred, and we can tell ourselves the story, well, it would have been way worse if we hadn't locked down the economies and suffered this depression in order to save lives. You can tell yourself that story. But now, with actual data to work with, rather than just forward-looking models, we can go back and see whether that's true. Because all around the world, in different countries, in different states, in different counties, in different cities, there have been different lockdown policies. And so we can see which lockdown policies produce the best public health results. In which one of those regimes did you have the most or the fewest infections, the most or the fewest cases, the most or the fewest fatalities? It's a big, diverse laboratory experiment. We can check also to see not just whether you had public health success depending on what mandates you passed or what laws you passed, but what people actually did. Because it's kind of creepy, but everybody's got a cell phone, and people keep track of where your cell phone is, and they supposedly anonymize the data, but Google and Apple, they're tracking you everywhere you go. So you may have had a stay-at-home order in your city or your congressional district or your state, but we can track your cell phone and see if you did really stay at home. So it's not just a question of looking at what the laws are, it's a question of looking at what people actually did. So we can correlate what people actually did during the lockdown era with cases and fatalities. And here's what you come up with. It's really a sad truth, but there's no evading it. There is absolutely no correlation between the degree of lockdown and the degree of success in controlling COVID 2019. There should be. You'd think there would be. Common sense tells you there should be, right? It's an infectious disease. So if you had perfect compliance where nobody had any contact with anybody else, shouldn't that be perfect? Well, maybe, but we're not talking perfect. We're talking about a range of imperfect solutions. And with the range of imperfect solutions that we actually implemented in the world, which were strong enough to cause the depression we're in, it turns out it makes no difference. Whether you had a very locked down state like California, and that 188 you showed at the beginning, that's the lockdown score that in my model I assigned to California. Of the 50 United States and the District of Columbia, California is the most locked down state. It actually had fairly good results in controlling COVID 2019. But New York was only slightly less locked down. Maybe I forget what the score is, like 187 or something. It had horrific results. New York State, with only about 20 million people in it, had worse results than some whole countries. Then a wide open state like South Dakota that hardly did any lockdown at all, no problem with COVID 2019. Now, I know what you're thinking. You're thinking it must be something else. Maybe it's just the natural population density, that maybe in a place like New York, we've got people crowded into apartment buildings and busy streets. It's a natural breeding ground no matter how much you lock down. In the prairies of South Dakota, nobody runs into anybody anyway, so how could COVID 19 get a start? Well, you can control for that statistically. It turns out that makes absolutely no difference. Here in my home state of Texas, the 5 densest counties, the one that include Dallas, where I'm talking to you from right now, Houston, San Antonio, Fort Worth, Austin, these are 5 of the densest, biggest cities in America. And of the 254 counties in Texas, some of which have like 2 guys in them and a few cows, those dense counties had the best results at controlling COVID 2019. So it's not density. We know that the disease is crueler on old people who get it rather than on young people who get it. Control for age makes no difference. General health conditions makes no difference. Just about everything you can think of to test to see what made the difference. Why did some places have such good results and some places have such terrible results? Some places so few deaths, some places so many. It turns out there's only one variable that makes any difference at all statistically, and that is the reliance of each state or county or city or whatever you want on public transportation. And that's why New York, New Jersey, and Connecticut did by far the worst among the US states, because they are linked together in America's biggest, busiest public transit hub. And it's only been about 3.5 weeks since those geniuses in New York decided that they actually ought to shut down the subways at night and wash them. Now, as soon as they started doing that, oh my God, the fatalities in New York they've just ground to a halt. It's been under 100 fatalities now on most days for the last 2 weeks. So I guess you can say the whole planet had a big learning by doing experiment where for some reason we decided that this particular flu-like disease was going to be the one we just had to stop. I don't know why this one got that distinction. A similar one in 1968, a similar one in 1957. Nobody did anything about those. Well, had about the same number of fatalities as a percentage of the population at that time. But for some reason, we decided to shut down the global economy to fight this one. We caused a depression, and now looking back on it, it turns out that that made no difference at all. COVID 2019 is a living thing. It has its own agenda. It has its own life cycle. It doesn't have a brain. It doesn't have plans. It doesn't have intentions. But like all living things, it has an arc of history. And it turns out that for COVID 2019, there is a period of about 6 or 7 weeks where once it gets a foothold, it grows. Then it plateaus, and then it stops. Nobody seems to know why. But it doesn't matter whether you cause a depression or not. So if it doesn't help to cause a depression, my advice to you is don't cause a depression.
Don, it's very interesting, analysis there. So lockdown doesn't matter, population density doesn't really matter, subways appear to matter, and that's a kind of ongoing joke within my group here, Don. My dislike of subways. We did a shoot once in New York City, and my co-host noticed my reluctance to get in the subway to do anything, and that became a joke among the crew. I wasn't worried about COVID. This was years ago. I was worried more about urine and other things than COVID. But that's become
You just don't like rats.
yeah, exactly. Rats and all other things. So subways make a difference. You're not going to be getting Christmas cards, I guess, from the transit authority, but it sort of makes sense that would be a problem. It comes up anytime people are discussing getting back to work in New York. So much of our information comes from New York-based journalists, and they always ask, it seems like the subways would, potentially be an issue. And that's a sensitive issue, obviously, because they have a sort of a business. They have expenses, that's for sure, and debt. So they want to get back to business. But what about other things, Don? Seems like if you're measuring deaths in the numerator, you're going to be, some of these assumptions are not going to work because, if you were measuring infection rates, maybe then densities would matter, but you're actually measuring deaths. So one other factor would be that the places that had the most deaths did not take care of their vulnerable population very well. And as an example, I'm thinking about in some places nursing homes being forced to take COVID patients. Oh, did that? Have you looked at that, or are you interested in looking at that?
I'm very interested in looking at that. I do want to let you know, though, that the correlation studies that I just described, I've run them both ways. I've run them on fatalities and just simply on cases where people didn't die. And you get exactly the same result, which is to say, no result at all, no correlation.
But okay, but can we trust the numerator there, Don? Because we don't really know what the you're talking about reported confirmed infections, right? What about all the ones that are asymptomatic that we don't know about yet?
Fair question. And that is, I think that ought to just reinforce our agnosticism that we just simply don't know what we're dealing with here. There have been a number of serological studies where instead of testing for the active disease, or the swab test, they're doing a blood test to see if you have antibodies against the disease. And there are places in California where typically you'll get maybe 30 or 40 basis points of the population as confirmed cases, but maybe 4% of the population. So 50 to 80 to 100 times greater. Turns out had the antibodies, but never even got tested because they had no symptoms. So why would you get tested? You don't want to have a swab put up your nose if you can help it. Now in New York City, they've done those serological tests, and they've done this in Boston too. And like as many as 20 to 25% of the people have the antibodies. So that means that the fatality rates that are being reported are minuscule because so many people have it who didn't even know they have it, and they didn't die. So you're right. I mean, the denominator is completely unknown, unreliable. For that matter, so is the numerator, because as you correctly said, the fatality rates in New York, notoriously because of the ridiculous regulation that caused nursing homes to have to accept infected patients. But even in places that didn't make that administrative mistake, typically 85% of the COVID deaths are among people older than 65. And as you get from 65 to 75 to 85 to 95, the curve of your likelihood of dying of it just goes up and up and up, and that gets multiplied by the number of so-called comorbidities you have. So if you have congestive heart disease, or if you have diabetes, or you're obese, or something like that, you just add those things together, and pretty much you get COVID, and it's a death sentence. But did you die of COVID, or did you die with COVID? So what's the numerator? What's the denominator? Nobody knows. So considering how much ignorance there is about this, even ex post, boy, it was a stupid thing to do to cause a depression.
Yeah, absolutely was. So, more and more people, even C2C, WHO, are acknowledging certain things like surface transmission is not as big of an issue as we thought. Even the person-to-person transmission with asymptomatic people was exaggerated. A lot of people are coming out and saying lockdown was a mistake, not just you, but people actually in government saying it was a mistake. That is all the good news that came with the bad news, right? That we overreacted. That's the bad news. But the good news is that we can get back to business now, and people are demanding it. And even here in California, June 12th, a lot of stuff is going to open. The last holdouts, gyms and whatnots, these poor people who've been out of business, they're coming back. So that seems like good news. Is it good news, though? Because you mentioned in one of the videos, I thought it was an excellent point. Even if you recover, you never get back to where you would have been if you didn't make those mistakes. And we made a ton of mistakes. So where do we go from here? Once we're opening up now, what are we going to see? We had a good report last week, I guess, given the circumstances. But what are we going to see in the next couple months?
Well, what we're going to see is the movie running in reverse. We have just, that in the news yesterday, the official gurus at the National Bureau of Economic Research officially now say that we're in a recession. And they say that the top of the previous business cycle was February, and so the recession started in March. So that seems like it makes sense. For a recession to have played out just in March, April, May, and now the first 9 days of June with such ferocity is completely unprecedented. The velocity and the magnitude of it put together are absolutely unprecedented. And what you're going to see is when this thing suddenly clears, you're going to see a bounce back that is just as unprecedented. We are going to have 3 or 4 or 5 months of growth that are just going to be one for the books. It's just going to be absolutely amazing. And I think we're probably going to get back to the prior peak GDP, which would have been in February of this year, probably by February or March of next year. Now, that means we will have had a lost year. You'll never get that back. And as you said in the introduction, that lost year is not just unfortunate in terms of people's income and wealth, it's also unfortunate in terms of their health, because the thing that is most correlated with good health outcomes and longevity is if you have the economic endowment to eat well and exercise well and seek the medical tests and care that you need. And if your income is held back, if your wealth is diminished and you have to spend the money on other things than your health, you're just not going to live as long. And so there are 7 billion people on this planet who have endured this depression and will never get that lost year back. And that lost year economically is probably going to take 1 or 2 or 3 weeks off of everybody's lifespan. As a statistical average, that's not saying every single person will live 3 or 4 weeks less. It means on average, because of this, people will live 3 or 4 weeks less. Now, because there are so many billions of people for whom that's true, the number of life years that are lost are measured in the many tens of billions. How many life years did we save by locking down the economy? Well, according to my studies, we saved none at all. People would have died anyway. That doesn't make it a good thing that they died. It just means that we have consigned everyone else to a shorter life in order to achieve absolutely no benefit in terms of saving anybody's life. So as we go back into opening up the economy, and you hear people say, "Oh, that's so terribly cruel, you greedy capitalist! You're consigning people to infection and death by reopening the economy and getting to go to sporting events." No, that's not the way this works. It's a false choice to think that you have to choose between life and dollars. We're choosing here between life and life. If we can have higher incomes, more wealth, we'll have healthier, longer lives. So if you believe in health and well-being, you believe in opening up and getting the global economy going again, man.
Yeah, Don, and I'm so glad, especially for these small and medium-sized companies that have really been hurting, that they're going to get to open up. But I want to ask you about uh, the delayed effects of COVID and the lockdown that might get in the way of this recovery, this volatile recovery that you're alluding to. What about, for instance, people who haven't had to pay rent for a couple months and now get this big bill? Are we going to see a lot of evictions and then foreclosures that come from that? What about companies that received money to not lay people off and then are just delaying those layoffs for a couple months? Do you anticipate any of that happening and that getting in the way of your thesis of the strong recovery?
No, I'm factoring those things in, Albert, because that's why the recovery isn't going to all happen in one day. Every time you have a recession, it takes at least 2 or 3 quarters. It normally takes 2 or 3 quarters to get back to pre-recession GDP. And then once you've done that, you can have many, many, many more years of economic expansion. But it typically takes 2 to 3 quarters to get back to where you were. And the reasons why it's not instantaneous is because you have to clear all that economic wreckage that you're talking about. Now, in this case, there's actually less economic wreckage to clear than normal because the length of this recession will be so short. This will probably be just a 3 or 4 month recession. And then the recovery is probably beginning right now. You alluded to that very strong jobs report we had on Friday that so surprised everybody. That means that the recovery is underway right now. And isn't it ironic that they're finally officially declaring it to be a recession now that it's over and we're actually beginning the recovery from it? That happens about half the time in history. So typically in a recession, you don't just endure it for 2 or 3 months, you endure it for 3 quarters, 4 quarters. The Great Recession in 2008, 2009 lasted 6 quarters. So that economic damage really builds up. More and more people lose their jobs, capital depreciate, people move, they lose their skills. It's really important to stay on the job and keep your skills sharp in a technology-driven economy as dynamic as ours, where the skills that you need to do your job change so quickly. If you're not on the job, you don't know what the new skills are. So the great news is that while this recession was very deep, it's very, very brief. And we may, we'll see what the unintended consequences of this are. But another hallmark of this particular recession is that the Fed and the Congress stepped in with various, use whatever words you want, depending on the emotional spin you want to put on them. Call them bailouts, call them relief, call them stimulus, whatever. This is typically what happens in a recession, and it probably helps recovery to some extent. But in this case, it's totally going to help because all of these extraordinary measures by governments here and around the world were put in place practically before the recession had even happened. It was just, the parachute was deployed way before you hit the ground, right? So I think we're going to be very pleasantly surprised by how robustly we come back. We're never going to get our lost year back. That's a whole other matter. But we're not going to be swimming around in a jobless recovery for 2 whole years like we were coming out of the Great Recession.
So so the economy is coming back, and I heard a guy on Bloomberg, I think, talk about the nature of this recovery, and you can read into it a little bit more, because when you're talking about small restaurants and shops that have basically laid off everyone and shut down, well, that's a pretty good indication of a bottom, meaning they can't go much lower than firing everyone and shutting down, and now they're reversing that. So that's a good point. With the larger companies, tech companies, if they have layoffs coming, you're not going to see that for a little while. But overall, I kind of buy your thesis that we're going to open and we're going to come back. That's the economy. Now let's talk about the stock market. The Nasdaq broke 10,000 for the first time. It seems kind of insane because even though, yes, you have heavy hitters like Amazon and Netflix in there that were able to go about their business and even enhanced their business, more so. It still seems strange that the Nasdaq is setting record highs and the S&P is less than 0.5% from where it was at the beginning of the year. That seems a little bit strange. What's your take on the stock market?
Well, it's not as strange as you would think. We've had 10 recessions, not counting this one, since World War II. And in 5 out of 10, in half, the stock market had completely recovered and was at new all-time highs before the recession had even hit bottom. So you just have to remember, stocks are forward-looking. They're not always right, but they are definitely looking forward. They are not driving through the rearview mirror. And Mr. Market is kind of voting with me on this. Mr. Market is saying we are going to have a very V-shaped recovery.
But a lot of this, you say forward looking, I would say Fed looking. They're definitely looking at the Fed and all this stimulus that has come and more that they've sort of promised. I'm wondering, is 10,000 just the new 8,000 now, and we're just going to march on from here? Meaning that we're not as well off. The things aren't quite as well as they look, but this is going to be the new baseline. We've got a new price level, and from here we're just going to go on, even though built into that number is actually a loss that you're not seeing.
Well, the way I think about it is I think over the intermediate and long term, really stocks are going to be pretty much priced based on the performance of the underlying companies. And these companies like Google and Apple, they are just reinventing the world in their own image, and they are going to rule the world until some other company that you haven't even heard of comes along and has the same kind of success story in the same small number of years that they have. That's just called capitalism. It's called creative destruction. The ones that I'm more interested in as opportunities are some of the old-fashioned companies, the financials, the industrials, the energies, materials that just got completely destroyed. For instance, the the S&P 500 energy sector, it lost more than all of its forward earnings estimates. From the January top in it to the March bottom, I think the market cap of it fell by something like 60, 70%. From its bottom, it's up 90%. And it would still have to rally another 35 to get back to where it was in January. So The Nasdaq in particular, but the S&P 500 too, is dominated by those same companies because it's a cap weighted index. So these giant cap companies, these FANG stocks, I think they represent, these 5 or 6 stocks just represents, I think, something like 15 or 16% of the market cap of the S&P. So there are vast swaths of companies that still have a very long way to go to recover. And I think there's a long-term bright future for these terribly innovative companies that you've mentioned. But just over the next 6 or 7 months, I think I'd want to put my money on the companies that got wiped out, where people are not betting that they can recover robustly. Energy companies, financials, airlines, industrials, so on.
Don, if we are in a recovery, when is the right time for the Fed to sort of pull back some of its support? And what should happen in the realm of fiscal stimulus as well? Should we be easing back on the rhetoric regarding fiscal stimulus?
Yeah, I kind of easing back on the rhetoric and easing back on the reality are two different things. You'll notice
It's an
that.
election year, Don. We're just going to get talk for.
There's no shortage of rhetoric. Um, I saw it wasn't very respectful, but I saw a funny political cartoon suggesting that all of the looting and the riots that we've had in the last 10 days themselves have been a form of stimulus, because think of all the spending and capital investment it's going to take to rebuild all that
Oh,
stuff.
jeez.
Um, the the reality that people forget is that sometimes the best stimulus is to have a really big shock that requires people to rethink their lives and to rebuild, to use new technologies that they were aware of but really hadn't quite been goaded into using yet. So you saw at Netflix's most recent earnings report, they reported just this enormous gain in viewers. Now, you know why? It's because there was a lockdown and people had to stay at home and watch movies on TV instead of going to the theater. Duh. But I was amazed that there are that many people who hadn't already subscribed.
Good point. Good point. Yeah.
So necessity is the mother of invention. And we're recording this on Zoom, which is just like an amazing high def video platform.
Security enhanced Zoom, I might add. So
Yes,
they've learned something out of it. Yeah.
indeed. I don't believe we're being hacked as we speak.
No, switch through US servers on an encrypted channel.
There you go.
Yeah. Although I want everyone to see this. I'd be happy for them to hack this conversation. I want everyone to hear it, but like you said, it's pushing people in ways that are positive, not negative.
So like most afternoons now, I'm doing Zoom cocktail parties with friends and their wives, and just because we're not traveling as much and visiting them in other cities and all that stuff, we're having more intimate, more frequent contact with those people than we were having before, because of this technology, which prior to the lockdown, the only time I ever used Zoom was with you.
Right. Right.
We can have a cocktail afterwards, okay? I'm not putting you down. But
Yeah. Yeah. And I never got invited to one of these parties, Don. We're going to have to talk about that.
all right.
I got one comment about everything you said in terms of the data, because I thought it was a great analysis. And I have one minor criticism. And that criticism is that it was a great analysis, much better than I've seen elsewhere, but it was still answering a we question in the sense of what should we do? And I think I was talking with a friend about all these other countries and what they've done, similar to the conversation that I had with you. And we said, well, Hong Kong had success, they did this. Taiwan had success, they did that. Japan did this. And at the end of the conversation, he just said, these things work. And I said, yeah, but we're never going to do that. I mean, the surveillance or whatever, Japan is sort of a distance culture as it is. So they had an advantage. I
That's
said,
right.
that's not going to work here. And he
Right.
said, you're right. America is going to have to find an American solution. And I think the American solution is personal responsibility, helping, your neighbor, that sort of thing. And I think a lot of it comes down to an I and you question, not a we question, meaning it's not, should we get on a plane and go see a client? It should be, should you get on a plane and go see a client? It's not, should we go into a busy studio and record an interview? It's, should I do that? And the choice should be mine, whether it's lives
Yeah.
versus money or lives versus lives, whether you're a
Sure.
doctor, do you choose to go to
Sure.
work? That is the only thing I would add to that. But overall, I thought I haven't seen many people looking at it that way. And
Yep.
if you're going to be actuarial about it and look at the numbers, at least do it properly. And I think you did a great job of doing that. So thank you.
Fair enough. Yeah.
So Don, go
Let me
ahead.
underscore how very significant it is that the only sustainable solution to this is one that people motivate themselves because they become inculcated with the knowledge and the morality to know that it's the right thing to do for themselves and for their community. And all these crazy draconian laws that are one thing in Japan, another in Hong Kong, another in Michigan, and another in Orange County, California. That's not those top-down solutions aren't the way to do it. The only sustainable thing is from each of us as individuals.
I have one question for you, though. We question: should we go get a burger and beer on Greenville one day? I hope the answer to that is yes, Don, and I'll be there in a second.
You got it, man. Can't
All
wait.
right. All right. Thanks again, Don. Take care.
Thank you. Bye bye.